Good evening, and thank you for either joining live or watching on the interwebs here. Thank you. This is the first installment of Retirement Readiness with yours truly here, David Vigil, where we talk everything about retirement and ways to help you retire or feel more comfortable about retiring. We have different experts and on the webinar discussing different solutions. Tonight, I have Mr. Mike Brody. He's with Advisor Capital Management, and we're going to discuss brokerage link. This is something that I became aware of about 3 to 6 months ago, and I've been in this business for 15 years, and I had no idea that this was an option. So without further ado, I am going to hand the reins off to Mr. Mike Brody, and we're going to have a little chat about Brokerage Link and everything about it. And again, be on the lookout for more retirement readiness webinar announcements. I have another one coming next month. The day hasn't been finalized yet, and we're going to discuss Medicare options with a good friend of mine, Mr. Chris Fredericks. So, Mr. Brody, how are you?
Hey, I'm great. How are you doing? Thanks for having me. Wow, what a week to start your first webinar series here.
Yeah,
No shortage of items to discuss. You've got the Federal Reserve raising rates. You've got the banks up in arms about various items. You've got growth stocks. You've got unprofitable tech. You've got rising rates. And so where to go, what to talk about first?
yeah, a plethora of options to discuss. So, where do you want to start?
Yeah, let's talk retirement as we kind of kick your first series off here. I've been in this industry 25 years. I grew up in the industry with a financial advisor in the house, and so I've gone through a series of markets over the years, including when I was a young kid at home with my dad as an advisor in 1987, and so have really seen the gamut of markets down, markets up, and everything in between. And so,
Mhm.
one of the common themes I've been talking to a lot of my advisors and clients today are really what's happening in the interest rate markets with retirees, because it's
Right.
changed a lot over the last 10 years. If you think about it, the
It's
Federal
changed over
Reserve,
the last, 12 months.
well,
Uh,
no doubt, every day, without a doubt. So if you think about it, the Federal Reserve kept interest rates low for really since 2009, right? And so where did retirees go to collect that 4-5% income stream that they were used to getting in the banks, getting in CDs, getting in treasuries,
I agree to corporate bonds, et cetera. Exactly.
et cetera, et cetera. And so really the way that the market changed over that time frame is that retirees had to pull from their principal to be able to get that income that they were and their parents and grandparents were used to over that 10-15 year time frame. Now, fast forward to today, you've got a Fed funds rate, meaning that the Federal Reserve interest rates that we will all soon be able to get in treasuries, in some bank CDs, and maybe in a year or two from now in the banks, it takes them a little while to catch up, is going to be about 5%, right? And so,
Hmm.
now clients and retirees might not need to pull from principal. And that's a huge opportunity, because the last thing you want to do when you're pulling income from an account, whether you're in retirement, whether you're funding insurance policies, regardless of what it is, you don't want to sell principal, because those shares never come back.
Right.
And you certainly don't want to sell into a down market, because then the shares really don't come back. They never have the ability to appreciate over time. And so it's really important to focus on how to generate income. And that's one of the things that we've been doing for about 25 years here at Advisors Capital Management. And so our portfolio management team, we have been managing retirees' assets since the late 1990s. Much of our firm comes from the Federal Reserve, the International Monetary Fund, the World Bank. But look, everyone has smart people working at their firm. That's kind of table stakes. I think one of the areas that we really excel in is giving you, David, the advisor, the ability to help clients manage their 401ks.
Excellent.
And and
And
so
that's why I
what's
have you on tonight.
yeah, what's really interesting is that technically speaking, a financial advisor is not supposed to give advice on clients' 401ks.
That is a
And
big
so
no-no. In again, 15 years I've been in the industry, and I've been at firms where they're like, don't even discuss the 401k. Don't talk about it. You can see how much they have or how much they're contributing, but don't make recommendations, become a fiduciary. All that good stuff comes into play. But with this, as you know, Mike, we'll get into that. I don't say it goes out the window, but it changes things a bit.
yeah, definitely. And so giving financial advisors the ability to manage clients' 401ks legalizes the process, legitimizes it, and now gives plan participants who are still working, who are still providing for their families, that are still saving up for retirement, and even those that are approaching retirement, the ability to have a professional manager look over what tends to be one of clients and participants' largest savings plans, largest
Mhm.
assets, right?
Right.
Maybe not their home, of course, but in most cases, there's a study by Fidelity, one of the largest custodians. Many of you probably have Fidelity as your custodian and as your portal in your 401k. The average 401k is now larger than the average rollover IRA. And so, as you can see,
Hmm.
individuals have been growing their assets over time. The markets have, for the most part, done quite well over the last 20 to 30 years. And now let's fast forward to how do you allocate to your 401k, your 403b if you're a teacher, your 457, government agencies, municipalities. In most cases, what we've seen is participants in the plan sign up for their 401k, their 457, their 403b, and they allocate a couple of the mutual funds inside the plan
Hmm.
and they never look at it again. Even
Right.
worse, even worse, what happens during a down market? So many participants, unfortunately, get nervous, talk to their
Yeah.
coworkers, talk to their friends, and go to cash. And for
Hmm.
individuals that are looking to save for 20, 30, 40 years, in some cases, that can be a real detriment to a portfolio. And so, with David's help and with many other financial advisors across the country, this plan allows a plan participant, someone that's still working, to get the professional advice. And so, David,
And
I don't know
I,
what you've seen, but what are your clients asking for?
so I guess not I'm gonna say a refresher, but this they don't have to roll over their funds to access the solution. It's held and done directly through their plan, correct?
Yeah, this
Yeah.
is a real simple process. All you're doing is reallocating a portion of the existing mutual funds inside the plan into advisor capital management funds. And it's a great way to complement what some of those other mutual funds are doing. And so, the market's been volatile over the last couple of years.
Mhm.
And a lot of plan participants have what are called target date funds. And I'm sure many of you have seen those.
I
And
wanted
target
you to
date,
touch on those. Yes, target
yeah.
date funds.
So target date funds were designed as, in many cases, a single mutual fund or a multiple mutual fund option inside a plan where, as time goes on, the target date fund targets a specific date for when a client is going to retire. So let's say the target date fund has a date of 2040. And so
Mhm.
assuming that that client's in their mid 40s, going to retire at age 65, that target date fund is going to change the allocation of the stocks and the bonds inside of that plan. And ultimately, what that does is it gives no real guidance on what a participant actually needs. What happens if that participant decides that, hey, you know what, I'm going to retire next year? Well, the allocation might not be the appropriate allocation. And what I always like to say is, hey, target date funds are better than nothing. It definitely gives a guideline. But when the market goes up or when the market goes down, a target date fund will never call you to tell you, hey, you're on the right track. How are we
Right.
going to achieve our goals? And so, financial advisors do that, not so much daily, but maybe weekly, monthly, quarterly, and annually. And so,
Right.
a little design flaw in the target date funds, but our plan gives a complement or an opportunity to reposition a portion of those funds. And so, David, do you want to scroll
Yeah. Mike, if you could
down,
touch
because I
on the
think we've got
firm,
a 6 or 7 page brochure here
we do, we do.
on
If
advisors
you,
capital management.
yeah, please, if you can just touch on the firm, just the, your high level. What is
Yeah,
advisor capital management? I know you guys are,
absolutely.
are more than just in the self-directed brokerage space.
Yeah, that's right. So our firm has really humble beginnings. The chief investment officer and founder of our firm, his name is Dr. Charles Lieberman. He goes by Chuck, but Dr. Lieberman started at the Federal Reserve of New York as the head of their monetary analysis team. And so everything that the Federal Reserve does and did in terms of broadcasting interest rates, broadcasting research, to Wall Street, to financial institutions, to countries, to municipalities. His team led that. And so he spent a few years at the Fed, and then ultimately he became the chief economist at JP Morgan Chase for over a decade. Well, he left the banks in the late 90s, started our firm, managing money for family and friends, and over 25 years built it to one of the top 100 200 financial advisory firms in the country. And so we manage about $6 billion in assets for clients. Our average clients are 300 400 500,000. And so we don't manage money for large institutions. We don't cater to banks. Really, the our only clients, our only product line are our clients. And so the company has no debt, no obligations to Wall Street. Really, we just manage money for individuals and their families to help them get to retirement and through retirement. And so we have about 60 employees. Our firm is a national firm. And a lot of what we've done through the years is to customize portfolios for clients. And so a lot of times clients come to us and, four main questions. What's my upside risk? What's my downside? Am I tax
Mhm.
efficient? How much income can you generate for me for retirement? And so those are the types of questions that our clients ask, and we build portfolios around that for clients. A couple of
Excellent.
years ago, we started managing inside clients' 401ks. And so we've taken two great business models and really kind of meshed them together.
Excellent. Appreciate that. Okay, let's talk about brokerage link and or self-directed IRAs. Now, I'm saying that right. It's not self-directed 401k. It's a self-directed IRA.
Yeah, it's very similar. It's a self-directed brokerage option. And what that means is for many participants in their 401k, 457, 401a plans, their plan allows for them to work with or select a third-party asset manager and a financial advisor to work with. And by giving your plan access to do that, you now allow David to work as the financial advisor, and you allow Advisors Capital Management to take over a portion of those mutual funds. David, as you mentioned before, this is nothing more than a reallocation of funds. There's no rollover, there's no
Right.
taxable event, there's no change in your client's statement, no change in the log on. Advisors Capital Management ends up becoming one or four of the choices inside your plan. And so it's a really simple solution. Quite frankly, um, not too many participants get involved in it, although there are 100,000 plans across the country from colleges, universities, municipalities, a lot of the Silicon Valley companies, and really companies across the whole United States offer access to this plan. In most cases, it's a simple log on to your website, Fidelity, TD, Schwab, select a box, and we help with the rest.
Excellent. All right, Mr. Brody, where are we at on the is this a good page?
Yeah, why don't we keep scrolling? I think, most people can just take a look and kind of read through the notes, but this is essentially how it gets started. And so many current employees offer on average 12 to 14 mutual funds inside a plan. And the problem is a lot of them are really cookie cutter funds. And so I want to give a quick example of where a lot of clients unfortunately have been burned over the last year, and that happens to be in the fixed income or bond market. And so many of these target date funds and fixed income funds purchase long dated bonds, and what that means is when interest rates go up, those bonds get crushed, and they get crushed fast. And if you looked at any of your fixed income accounts last year, unfortunately they were down 8, 10, 12%. And that's a big number for fixed income. Unfortunately, these types of target date funds are not as flexible and not as nimble as some of the funds that, David, you probably offer, as well as what we do inside of this self-directed brokerage account. And so we are much more discerning, much more flexible, and on average, our fixed income portfolios, lost value of maybe 3 or 4% lost last year when most of the market was down 8 to 10. And so a good place to be in having a financial advisor to help you access your 401k and actually give you the advice on it. And we can scroll to the next page. I think really the way that what we call Pathfinder, and that's just the name of the program, is keeping someone on track with their retirement. And if you keep scrolling, because we've kind of covered a lot of this, which I tend to do, I front load a lot of the materials. Essentially, with David, you would go through a standard risk tolerance profile questionnaire, which would ask you a lot of the same questions that you're used to when opening, many other investment options. And from that, whether you're an aggressive investor, a conservative, a moderate, or anywhere in between, you get access to anywhere from 1 to 4 mutual funds, a well-diversified portfolio that goes directly into your 401k.
And I go a little bit beyond that. So the risk tolerance questionnaire is a part of the planning process, but I'd prefer clients, new clients, prospects. We do actually retirement plan. So I let the plan dictate the investment solution, not so much the risk tolerance. So I have folks who are want to reach their goals with the most limited amount of risk on the table, and that can be an option. It all depends on, again, what your overall goals are. We can fund your retirement, create a plan where it lasts you to wherever you want it to last, and you don't need to be 100% stock if you don't want to be. That's one of the options I go over with you. So, okay, go ahead, Mike.
Yeah, no, that's a really important story. As our roots at ACM, Advisors Capital Management, also are in the planning, CFAs, certified financial planners. And so we too have teams at our firm that help us build custom portfolios for clients that need income of 3, 4, 5, 6%. We work with a lot of planners that understand the annuity market and understand the insurance market. And so we're really a comprehensive financial fiduciary registered investment advisor firm. We work with a very limited number of financial advisors, and we find that most of our advisors are well tenured in the industry. And so it's a very nice marriage between our financial advisors and our firm. And so for anyone that's interested, we have a weekly commentary that we write. Each of our 10 portfolio managers kind of cycles through that, including one of our senior economic advisors, a gentleman by the name of Dr. Alan Greenspan. Dr. Greenspan has worked for our firm for about 8 years now. He and the founder of our firm, Chuck Lieberman, Dr. Lieberman, worked at the Federal Reserve and in many capacities together over a couple of decades. And so
That's Greenspan, the former Fed president.
that is Greenspan, who served 4 presidents and 5 terms at the Federal Reserve. And so he's still writing commentary for us. It's pretty incredible. He's 97 years old. He is slowing down a bit,
Wow.
but he has, over the last 8 years, been going into his office, almost every day, and he still does his full economic commentary. My guess is he probably will be retiring at the end of this year. However, he's been a great senior advisor to our firm, and he wrote articles on COVID and had some great stories about various markets, and so we can provide that kind of commentary for many of our investment portfolio managers. A lot of times early morning you'll see them on Bloomberg or CNBC, and so that's how we work. We're very accessible. Our portfolio managers are accessible, and everything about our firm is transparent for clients that are interested in learning more. Can work with David, and I'd say we probably work with about 5,000 financial advisors across the country. And
Mike,
so with
let's talk a little bit about you. You're mentioning the yield as far as people in retirement. Now, are you talking about a withdrawal rate? Or are you just talking about income produced off of the investments where the folks are living off of their dividends, their interests, and not touching their principal?
Yeah, that ties back really well to what we were talking about in terms of generating income. Now that interest rates are bumped up to a nice level. And so uh, what we do is we build custom portfolios targeting specific percentages of income for clients that need to generate that income, so that they don't have to sell the underlying shares of their investment, and so they can live off of those dividends and distributions. And we'll do it in a number of ways. We'll do it with fixed income bonds only. We'll do it with dividend paying stocks. We'll do it with real estate.
I love
We'll do it
spicy, so
with
I'm okay.
oil and gas, and we'll really do it with a multi-asset class approach. And so it's really for individuals that are coming to financial advisors and asking them, hey, how am I going to generate the income that I need to live and sustain my retirement? And so in many cases, that's 10, 20, 30 years. So we do a lot of that work standalone in our primary business line. And we also do it now inside of this option available for clients that live in retirement. But quite frankly, this is more of still an accumulation while clients are building their assets. And from there, we can help them transition once they need to start taking income.
Got it. Okay. So lots of information. Again, just the highlights. This is within your 401k, 403b, 457. You have the option to hire a money manager if you're hands off on your retirement account, which is probably not a good thing. You can have someone manage it for you. Now, with management, there's a cost associated with that.
Absolutely.
So what are the costs to access advisor capital management within self-directed IRAs?
Yeah, believe it or not, a lot of individuals think that their 401k plans are free, right?
Right,
Well,
right.
in some respect, it's free as the benefit of working at the firm, but the reality is those plans do need to be administered behind the scene, right? And so the typical 401k plan, cost clients or participants about 1.25, 1.3% taken out on a daily basis from the mutual fund fee. And so no one ever sees the actual underlying fees, but they're there. Uh, our program is going to cost about 75 basis points in additional cost. And that gives you access to David, that gives you access to our entire research team, and really all the funds that are available inside the plan. And so, what many studies find is that the average investor over 20 or 30 years, because of some of the moves that they make in their own plans, tend to do about 3.5% annualized on average. It's kind of a small number when you think about it. Over that same time frame, the S&P's done about 9.5%. And so by working with a financial advisor like you do on so many aspects of your financial planning, really helps to keep you engaged, not panic, not make the wrong moves. And so the last thing anyone wants is to be whipsawed in the market. And so this opportunity allows, the professional management, the professional team behind David. And so that's really the accessibility and the importance of the plan is to stay invested in the right options at the right time and not to panic.
Got it. Okay, that was a lot. Anything else you want to add, Mr. Brody?
That was a lot of information. And so I think we can leave it with that, but we're happy as a firm to provide any of this market commentary, and we can certainly provide that to you, David, and you can disseminate it to your client base, and we're happy to help in any way that we can.
Excellent. So folks who are wanting more information about this, please get in contact with yours truly. And again, this is the first installment of many more to come. I have another retirement readiness where I'm going to discuss Medicare with a Medicare professional next month, to be determined on the date. So, Mr. Brody, thank you so much for joining me tonight. Very informative. I'm sure folks going to have some questions, and hopefully it's okay if I reach out to you with those questions. Excellent. So
I'm a
thank
partner
you.
in the firm. Will be here every day in this chair for the rest of my life. So reach out anytime.
Appreciate it. So I'm going to stop here, and then we'll get into the Q&A session here. So thank you again.